Hi everyone, JJ here. Well, I just made an episode about this news on the art of value, and I didn't want to make that episode too long. I'm going to react to a couple of finance videos about this news, see what they have to say. So I'll publish this on the Stocks Today with JJ and on Patreon as well, so check that out. I'll put a link in the pinned comment here to the art of value related video, but let's get into it. Let's see what they have to say about this news.
What will happen now? You know, he's going to become... I suppose this Tmall CEO, what does it mean? He's got several hats now.
Exactly. So he's not only the CEO of the group company of Alibaba, but also of Taobao Tmall, which is the core e-commerce arm, and also of the cloud business. So we know that he's going to be juggling many hats here. The point is that Alibaba is showing that they are focusing on their core businesses, which they see as e-commerce and cloud. And that's what he really wants to go in and personally, take the helm on.
Okay, so Eddie Wu, the CEO, he hasn't been CEO for that long, since September, I think it was. And so now he's going to take control of the e-commerce division. It's their profit driver, Tmall and Taobao, and also he's in control of cloud. So he wants to make these things work together. Cloud hasn't been growing as strongly as they want, not nearly, so very low numbers in the last earnings. I made a video about that on the art of value. But he's going to take control of e-commerce. Can he drive it forward? He's one of the co-founders. Eddie Wu's one of the co-founders with Jack Ma way back. I think there were 18 co-founders, but Eddie Wu's still there, and he's in control of the company, and he's having more of a direct control of the e-commerce, the behemoth e-commerce division, China division. That's where most of their money's made, and that's where they started. Let's see what else they have to say.
Interesting, because then separate to that as well, they've also announced this morning that they're going to be establishing an asset management company. So do we know what that's going to involve exactly?
We don't have too many details. They haven't disclosed what exactly will fall under that company, but we know that it's going to be assisted by Trudy Dai, who is formerly the chief of the Taobao Tmall business. And this will fall under the group company's capital management committee, which is chaired by Joe Tsai. Again, we think that this will probably include non-core assets of the company, but at this moment, it's still not clear.
Yeah, it's going to be fascinating to see what this is, this asset management part that they're starting with some really key players in there, key management players. So we'll have to see, are they going to invest in something big? Is this going to be like a new division that they see as being really big? I mean, Tencent invests in a lot of startup companies, new companies. And of course, Jack Ma has started new companies. If you don't know this, didn't put that in the other video either, but he started the startup company that is actually working with Alibaba. So I'm wondering if, because Jack Ma's gone, he's sort of to the side. Either he'll come back. I made a video about that. Is Jack coming back? He's said he's congratulated PDD, Pinduoduo, about their success recently, but he seems to be speaking up about Alibaba again. Could he be working in the background right now? He's got these other companies. I wonder if he will have something to do with this asset management company as well. I don't know. It's going to be fascinating to see. Could this end up being a big player? It's a big conglomerate, so many things going on, and now they're having this asset company, which reportedly is going to have about $1 billion worth to invest with, so it's substantial.
So, is this representing a strategic shift as well? What does it mean on that front?
The company's executives have actually clarified several times that what they want to do is focus on what they call unlocking the value of their parts. So that means focusing their resources on the core business and then allowing their non-core businesses, to find different ways to monetize.
So I've made videos about this too. They've announced that they're going to IPO 6 divisions. They put the cloud division on hold. That IPO is not happening. They probably wouldn't realize the value that they wanted to there, which is part of it, and because it's got low growth at the moment. So they're wanting to accelerate that. And let's see what it says here. Eddie's leadership of both Alibaba Cloud and TTG will ensure total focus on and significant and sustained investment in our two core businesses of cloud computing and e-commerce. And of course, there's AI in there as well that could work with both of those, with e-commerce and cloud computing. So Eddie Wu taking control of that. This could be a big move forward. We just don't know. We'll have to see what happens. It's not going to be fast. It's not going to be overnight. They really want to get that cloud moving. And the US cloud counterparts, as I said in the other video, have been growing much faster. Don't know what the reasons are for it growing so slowly. Of course, there's been a slowdown in China, but really it's got such low growth, so they'll be wanting to really accelerate that before they IPO. Now I want to give a quick shout out to Matt Scott, a new The Art of Value Patreon member. Thanks, Matt, and I hope you enjoy the content over there. Now, if you don't know, I've started this Patreon community. It's got exclusive content as well as all of the content that I make all in one place, all ad-free, of course. I'll put a link in the description, and I hope to see you over there. Do check it out.
To be one channel which they want to use to monetize those non-core assets.
I'm interested in the market reaction to this, and have you spoken with anyone out there yet to sort of get their perspective on this? Because we did see Alibaba sort of spiking north of 3%. It's since given up a lot of those gains. Does that tell you investors are still a little bit cautious about how to interpret this?
The share price did spike, and she said it's pulled back, but it ended the day pretty well. It has had a bump out of this, so they'll be encouraged by that. I mean, they've said that they don't really look at the share price, but it's just been hammered so much, down over 75% still, that they'll be keen to see any bump, any encouragement there.
Exactly, definitely. I think that's the big question. How is this going to affect future listing plans? We know that Cainiao, their logistics arm, was planning to IPO sometime next year. We've already seen a lot of bumps with their other IPO plans. The cloud arm was going to spin off. Now that's not going to. Fresh Hippo, their grocery arm, is also suspending their IPO plans at the moment.
Fresh Hippo, they postponed that because they didn't think they'd get the valuation that they wanted at the time. The Chinese economy is so bad and the share market's not doing great. It's probably a bad time to do that. Really, the main reason that they want to IPO is to realize the value, because the market values dropped so much that by having these independent companies will help realize the value. Of course, that's open for debate whether that will work.
It just remains to be seen how that's going to affect a lot of their future spin-off plans.
Now, if you're getting value out of this episode so far, I'd appreciate it if you hit that like button to help the algorithms to spread it to more people, because that's what we want. Thanks. Okay, we have this other video which is more general and talking about the competition and the Chinese situation. Let's get into what they say.
Stocks have rallied in the fourth quarter. One of China's biggest tech names has been falling. Can an executive shakeup turn things around for Alibaba? Let's bring in Deirdre Bosa for today's Tech Check. Hi, Dee.
Hey, Morgan. And Alibaba has really been underperforming for years. Its latest attempt to win back investor confidence.
It is years too. It's about 3 years at this point, just being hammered and hammered. So investors who've been in it for a while, and including me, have kind of been hammered and just waiting for a turnaround. PDD, its competitor, has turned around. It's had a huge run up. Alibaba has not. So we'll have to see what happens, and investors will be keen to see any kind of encouragement, any bright spots.
It is another executive shakeup, this time giving its CEO greater control over its e-commerce business. It is a move that consolidates power around Eddie Wu as Jack Ma continues to really stay out of the picture.
Jack Ma's staying out of the picture, but he released that memo, which I made a video about on the Art of Value, where he really congratulated PDD and said that Alibaba's got to basically get its act together. And the fact he's saying something publicly implies that he might be coming back in a bigger way. We'll have to see what happens. That would be encouraging news for the market if that happened, because he was responsible for the growth of Alibaba, the building of it into the behemoth that it is today, even though the market value's gone down a lot. It used to be a bigger behemoth, but now it's seen on par with Amazon, and today, in terms of its market value, a shadow of its former self. But the financials it's still going well. They got tons of cash, that's for sure.
Crown to Pinduoduo, or PDD, as China's most valuable e-commerce company. PDD, along with Shein, has done what Alibaba was never able to do, and that is capture the American consumer.
That's true. That PDD owns Temu, and it's been doing well internationally, going into the US, and where I am in New Zealand, we can buy from there too, as well as AliExpress. It's been doing well, but as I said in the other video, and I've said before, I'm questioning the financials of PDD. The margins seem too good to be true. We'll have to wait and see. I might be wrong about that, but really it's kind of far ahead of any other competitor, how they're doing it. People say it's the scale economy shared model like Costco or Amazon, but even then, how can the margins be as good as they are? I don't know.
It might be interesting to think of it as two buckets emerging: the Chinese old guard and the Chinese new guard. No longer are investors as excited about that so-called BAT-X group, China's answer to our FANG, made up of Baidu, Alibaba, Tencent, and Xiaomi. All eyes have shifted to this new class of Chinese tech giants and what they might do in 2024. And key here, what kind of impact they might have on our own American tech landscape. The old guard on your left, it was mostly contained to China, or at least the region.
This is interesting. Let's unpack this a bit. The old guard versus the new guard. I mean, she's talking about it in past tense, but these companies, Alibaba, Tencent, and Baidu, are still going strong. Baidu has a new AI language model out. It's just that we don't hear much about it in the West, but these companies are still strong. They are the old guard, but they're still there. She's sort of writing them off. It's almost like it's a market valuation rather than what the companies are actually doing. Tencent in particular, they're just in so many things, and the founder there, Pony Ma, Monish Pabrai, thinks that he is one of the best founders and entrepreneurs in the world, and he's invested in Tencent rather than Alibaba. He swapped after he investigated Tencent. So old guard versus new guard, yes, sure, there's new crop of startups, and Pinduoduo did start later, but we'll have to see what happens. I mean, it's still early days in terms of the competitive landscape, I think.
The new players, though, they are challenging our own tech giants, either here or on home court back in China. I mentioned Huawei versus Apple. There's Temu and Shein versus Amazon, TikTok, and all of our social media platforms. And I'd even mention the EV race, NIO and BYD, and the other Chinese EVs versus Tesla.
That's another story. I'd like to talk about that sometime. The EV competition, people haven't heard much about. BYD, especially Tesla investors, wrote off BYD. Elon Musk did in the early days, but it really is doing well, selling just as many electric cars as Tesla does, and of course backed by Warren Buffett. Berkshire Hathaway had a big investment. They've been selling down lately this year, but still they had it for over a decade and it did very well. They saw it early and it turned into this behemoth of EVs. It's really Tesla and BYD being the most successful.
If you are holding an ETF like the Chinese tech KWeb, you wouldn't have seen any of the value creation from the new big four. Shein's planned IPO next year, guys. It could set the tone. It could either see the others try to go public, or it could encourage them to stay private for longer, depending on how it goes. And that is very much an open question, especially as Washington takes a harder look.
It's amazing. I mean, the old versus new really sort of speaks to this geopolitical backdrop that we find ourselves in, and the dynamics between the U.S. and China, and what that's meant in terms of leadership in that market. But I also wonder, and maybe Alibaba, for better or worse, has been the poster child of this, how much this new class of winners is dictated by the politics and the regulatory environment in China, too, when you realize that there was a crackdown on some of those names that were the prior leaders.
Yeah, that's true. The crackdown was perceived to be on these like Tencent, Alibaba, and this old guard, but Pinduoduo was involved in that too. They didn't escape that. They did have some scrutiny there. If you look at the stock graph for PDD, which I looked at in the other video, it did go down a lot. It's just rebounded quicker. So they sort of come out of it quicker, and Temu is partly responsible for that, whereas Alibaba's lagged.
In short, very dictated, right? Because what the Chinese government tried to do a few years ago was crack down on the dominance of that old guard, of the Alibabas and the Tencent. So inadvertently or advertently, it has created this new class. But that also raises the question, could they crack down on this new batch if they become too dominant? And that is always the risk with Chinese stocks, right?
It is definitely part of the risk investing in Chinese stocks. If the Chinese government was trying to create the perception of less wealth inequality. Some people got very wealthy from companies like Alibaba and Tencent. But PDT too, if the market cap is above Alibaba, if it gets too big, people could see that the same thing might happen there. And as I said, I have questions about their financials.
What is stopping Beijing from cracking down once again? And for reasons that we don't always know, right? There is still, the idea of founders and billionaires at odds with Beijing, and that can affect the whole company and destroy a lot of value.
Okay, if you got value out of this video, please remember to hit that like button to help to spread it to more people. And thanks for watching, everybody. As I said, I'll put a link to the video I did just before on the Art of Value channel in the pinned comments, so go and look there. And thanks everybody for watching or listening, and I'll see you in the next one.